So we'll go, and this is from the top down, like literally everything you need to know to trade my strategy. If we look at a downtrend, like most people want to always say it's like this. But in reality, we all know it's more like this. So if I can get in on these jabs, like these little jabs above highs, that's where I like to get in, because I look at it like these traders got stopped out. There was a sweep of liquidity, and I can now put my stop in a logical place.
All right, folks, here we are on Trading Up. We've got Jesse Rogers in the house, aka Casper SMC. He's about to show you pretty much his entire strategy here. Let's call it a masterclass. He did 40K, and there's proof in the pudding. We'll put that up here now. In the last month, we're going to get to see the strategy that got him there. So welcome back to the show, Jesse.
What's going on, man? I appreciate you having me. Yeah, I'll be quick, man. It's funny. I wonder how long this will take, because it's probably the simplest strategy that anybody that's watching has seen in a while.
We've got some major news here at Blue Guardians. These guys have got MetaTrader 5 back on the platform, completely reliable and stable trading conditions. The execution speed is absolutely exceptional. Go and check it out. Grab that 30% off and enjoy MetaTrader 5.
So I believe that like every strategy, whether it's ICT, whether it's support and resist, I mean, like literally anything, it comes down to two things, right? It's just different methods of finding them. So you've got your levels and you've got your confirmations. Now, the big difference between me is like most people in ICT, they say, oh, we traded into liquidity. I'm just going to look for a market structure shift in a reversal. But me, what I look for is just once we hit this, what happens? Because as you know, a lot of times when the market hits, you get those fake out reversals and the market could continue. So I look to try to capitalize whether it reverses or whether it continues, because I believe that if you're always just looking for a reversal, it doesn't happen as much as most people need frequency to trade. Like there's this, idea. People say like, take one trade a week. It's an A+ trade. It's perfect. That's all you need. It's like, okay, that's cute. Like it's not realistic. Most people aren't going to do that. So I found that it's much more practical to trade both continuations and reversals. And I have a very mechanical way. I think that you need to be mechanical in everything you can possibly be. So we'll start with levels. And this is how I mechanically map levels. So what I trade is time-based liquidity. Now, most people know liquidity. It's just swing highs and swing lows. But I use ones that are in specific time ranges because it makes it mechanical. And whenever, like if you talk to quants that are, trading algorithm or creating algorithms, a lot of stuff is based on time, because there's time and price. That's the different axis of the scale we're looking at. But time is constant. Like one person can argue that this is an energetic move or what structure. Some people says this is the high or whatever. It's all subjective. There's no proof. But you can't say that it's not midnight, right? Everyone has to agree on that. So that's why I like time-based liquidity. It's because it's mechanical. So what I always do is I will mark out the previous day and the previous day's high and low. Now, right now it looks like this is the current day, but we're in replay mode. I'm just showing an example. And the actual day we're going to be using for an example is the next day after this. You can see this is Thursday, the 20th. So I always mark out the previous day's high using the daily candle, and I only trade NASDAQ. That being said, this works for all markets that have, all traditional markets. Don't go and trade Dogecoin using this. It probably wouldn't work. But I will go, and then after that, I don't know why this always does this, because let's see. So it's actually right here. It's because the continuous contract, it makes it all glitchy. But that was the high of the previous day. As you can see, we're going to be trading on Friday, will be the next day. So I'll go ahead and move this to where I usually trade, which is it's at the same time every day too. Like my strategy, it's at the same time. Just one time frame is really all you need. I just use the daily time frame to make it easier for this example. So it's 7:15. We'll go a little further. Okay, so this would be 9:30. So I only trade after 9:30. All right, so what we'll do is also, after you've marked out the previous day's high and previous day low, just to be clear, like my strategy, I'm always trading from one level to the other, okay? So the other areas that I mark out, I use you're going to take a vertical line. So you can go on TradingView, you can map it out, like just pick the vertical line. And you're going to go and put that vertical line at 6 a.m. You're going to put it at midnight, and then you're going to put it at 6 p.m. the night before. So 6 p.m., these are all New York time. 6 p.m., midnight, 6 a.m. What you've just marked, and some people will be in the comments telling me these aren't right, but it's okay. London and Asia. This is how I mark them. I understand there are other times people use to dictate what these sessions are. This is how I do it. Okay. So I've gotten, even though I say that, people will comment and be like, actually, anyways. Okay. So what I do then is I will mark out the highs and the lows of each one of these ranges. Now, if you see the Asia high was traded into during London and looks like, this was the Asia low. So both of these have been traded into already. I'm not going to be paying attention to that. I'm only paying attention to New York. So I look at it like, okay, well, this level has been traded into, right? So this London low, and this is the one that actually got traded into after 9:30, because usually I'm marking out these levels pre-market. So it would look something like this. Now, what I do here is I wait for 9:30 to hit, and then I'm saying, okay, cool. Like I'm going to wait for the first one of these levels to get hit, and I'm going to wait for the reaction. Now, as we know, because we've already seen a little bit of a sneak peek here, London low got hit. So at this time, most ICT traders are going to say, cool, I'm looking for a reversal. Okay. Most people are going to say, we hit the London low. I'm only looking for reversals. Now, will I trade a reversal?
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, and you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So what I'm watching for is once we hit into this low, what happens? Right? Because if yes, I look at like liquidity, right? Like if we're bullish, we should reverse. Because the way I look at it, if the market's bullish, and there's a lot of sell side liquidity, meaning there's a lot of selling going to go on under this low, whether it's people getting stopped out on longs or people trying to sell and push the market down further. If the market's bullish, then we're going to see massive displacement or big energetic moves to the upside. But as you can see, there are no energetic moves. There's no fair value gap. We're not breaking out much market structure, right? And in fact, the market just looks like, if you just eliminate this looks like a very clearly bearish market. But most people get diluted and they force a reversal because maybe they had a daily bias that the market was going to be bullish this day or whatever the hell they had this preconceived notion of. But instead, I just look at like, well, what's happening after we've hit this level? So if I say what happened after we hit this level, I look at this as like a failed move to the upside and another move down. So what I will look at is once the market sweeps up to the upside, right? And we see this kind of price action occurring. Let's just say we get an engulfing, like we do right here. Or if there was a fair value gap and we inverted it, or if we get a market structure push through this. So what I'm looking at that point is that this level is not going to be the level that gives us the reversal because it's already had its chance to, right? So when that starts happening, when you see this level fail, this is where I'll flip from trying to trade from reversal and look to trade into the next level, which is the previous daily low in this example. But this would be any level. Like let's say if I was trading into the London low here and the Asia low was a little bit lower on another day, it would be that level, right? Just whatever the next level is. Also, if there are huge like daily equal lows or something like that nearby, you could look at that as well as a target. You're just trading from level to level. So once this market fails right here, an aggressive entry would be that you just enter the trade right up here, like once we've engulfed this series of up close candles. Because I look at it like we have a series of up close candles. If you engulf that, all these longs that did try to attempt and stepped in, they're all trapped. Like all of them are underwater. Anyone who got in at this area, they're underwater. So I look at it like I want to see these traders squeezed. You can enter the trade right there and put your stop at the recent highs and just target this low down here. Very simple. Now, let's say if you didn't catch that first trade, but this happening right here tells you that like, okay, the market's likely going to be bearish because you're not, what you'd want to see is displacement to the upside. You don't get it, but you start to get continuous pushes to the downside. So what I'll wait for at that time is some kind of sweep of an internal high, because I always say that what the market's doing at highs and lows tells you everything you need to know. Okay, what I mean by that is once we've hit into a key level, because this is the most important part. You've hit into a key level, so everything after this you're paying attention to. Nothing really before it. So how is the market reacting to lows and highs after this? Well, for a little while, it's just wicking around. It's not really closing or giving any kind of, clear-cut displacement to the downside. But if you look over here, again, you're not getting that energetic move. Like when you look at this doesn't scream bullishness. So if we think that this level is going to fail and we're going to move to the next one, I'm just going to look for some kind of sweep of an internal high and I'm going to watch to see how do we react from that area. And I'm specifically going to watch the candle that sweeps this candle's high, right? So if we look right here, this candle right here swept the high. As soon as that candle gets engulfed, meaning another candle closes through it, which happened right here, as soon as that candle were to close, you could enter right there and put your stop on that candle and then just still target that same area. And if this happened again and again throughout this pattern or throughout this leg, because like what you're doing is like, for me, I look at it like I'm trying to trade a range. If I think this is going to fail, then I think that we're going to go here. Then as long as I can get good enough risk reward, I'll trade anywhere in that range. I just need to get a sweep, like a manipulation or a sweep of liquidity like that, and then trail my stop loss right there. Now, if I was like, let's say if this to go into price weighting, we talked a little bit of this on our interview, but price weighting is a strategy that I've used to get better risk to reward in the long term. It won't always work in every single trade. Now, this trade, you would have lost a little bit of your risk to reward, but I'll still explain it because I think it's important to kind of go over. So let's say if the market hit into this previous daily low, instead of taking full profits at it, what I'll do is I'll move my stops up to this candle right here. So, and you could see that in this market, I did sacrifice a bit of risk to reward, right? 2.48 instead of 2.9. But what will happen sometimes is this market will then massively flush and you'll end up getting, I mean, it doesn't take much to really increase your bottom line. So that's the way that I do price weighting. So I just wanted to still show that example, even though on this trade, it didn't give you some crazy risk reward. Because I think it's actually better to teach on this example. That way I don't just cherry pick the perfect examples. But as you can see, there were multiple entries you could have gotten in this trade. Now, another thing that you can do as well to kind of throw a little bit of a scalping take on this strategy is, let's just say if you wanted to trade into that London low pre-market, or not pre-market, with the opening of the market. Because remember, I trade after 9:30. So if I'm looking at the market after 9:30, and I'll draw a line right there just so we can see, I already established that we're already moving away from one of these levels. Like if you notice what happened to this previous daily high, you obviously have a reversal, right? I'm not going to act like I'm a rocket scientist for pointing that out. Now, if we know that, again, like we're talking about before, we're projecting the market's trading from this area to that London low, right? Like you look at the market like levels, okay, I've got a confirmation with bearish structure that we're going to move to the next level. So if we're going to move here from here, how can I catch a piece of it? And that same logic applies. So if you look right here, on the way down, like if we look at a downtrend, like most people want to always say it's like this. But in reality, we all know it's more like this. So if I can get in on these jabs, like these little jabs above highs, that's where I like to get in, because I look at it like these traders got stopped out. There was a sweep of liquidity, and I can now put my stop in a logical place. So in this example right here, you see the market swept this high, right? So here's a little swing high. It swept it. And then you would enter as soon as that candle got engulfed, and you could look to just trade that. Now, not the craziest risk reward on that, but I'll still take those. Another thing, people just say they only want like 3R. I take like 1.4, 1.5R trades just because I know it has such a high hit rate. So that would be like kind of a little bit of a modification to the model that you can trade to get extra moves. That's it. That's pretty much the whole strategy.
Cool. And so how many trades would you have taken in this one, like in reality?
So for me in this one, I would have probably taken 2. I would have taken this first one and then a second one. I wouldn't have taken all 3. Like if I'm already in one, I'm not going to always just scale in. Now, it depends if I'm very confident in the day or in the move, or I'm expecting. Another thing that I use as well as a filter. Here, let me just share my whole screen.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Now, profiles are just going to be showing either volume or time spent. So like, for example, if I draw this right here, what this is showing is like, where did we spend, where was the most amount of volume traded? You have your point of control, and then your value area high and low. Now, what this is just the 70%, like where 70% of the volume was traded. So in these, and I'll just draw something out just in a volume profile or any profile, what you're looking at is that you have this big hump, and then you'll have like little kind of like volume areas. So anytime you have actually, let's just not even try to use my terrible drawings. I'll just draw a larger one because this will be better. The point of what I'm trying to show here is that I'll use this to determine when I expect explosive markets. Okay. So if I go from here to here on NASDAQ and we go on like a 4 hour. So notice how like the market right here, and I'll turn off TPO. So notice how like the market right here, if we drew that, there's this peak, there's like a little valley right here from these peaks. Like there's a peak right here, and there's like a valley, almost like a dip right there, which means that if the market falls into this, like you can see right here, and it stays in it, that you're going to get an explosive move like we did. Now, once you hit these areas, usually that's where you'll start to get some kind of chop. And if you don't, then the market's likely going to flush through it. Like, obviously, as we saw, because this is all going back to, way before. So if you look what happened when the market hit this area. So the market hit that high area, you're expecting a pause. Now, if you displace even through it even more rapidly, you're going to expect to really get some momentum. Now, what I use this for is determining on like how many trades I'm going to take. Like, for example, let's say if I was in this day and the market's coming down and we've broken through this, and let's say I'm selling on this day. Like we've already came under this level. The market's really showing signs it might like free fall. That's the kind of day that I'm going to be a little bit more aggressive with my risk and amount of trades I'm taking. So a long explanation to kind of answer that question. Hopefully that was helpful.
And just like if you had to give a sort of roundabout win rate, what is it typically?
For me, it's like 40 to 45% right now. It's a little lower than usual, but I'm doing better. The overall day win rate is closer to 60 though, but trade win rate is like 45 roughly. So usually though, like I know that before I would have like a 50 to 60% win rate. And what's funny, speaking of losing streaks, I had a losing streak in that month that we're talking about of like 5 trades.
Oh, seriously?
Yeah. So just to put it in perspective, like what, but I mean, I was doing it live, like trading in front of all of my traders, which is like hundreds of people, that paid me to watch me trade live. So it's an extra layer of psychological impact. I mean, for me, I'm used to it, but the point I'm trying to make there is like, you can't let those external things get to you. You just have to keep executing. Also, this NASDAQ is insane. This NASDAQ is like, holy shit. It's literally already down another, like, wow. We're down 1,000 points from last week's close.
Oh, right. That was, the market's just open, folks. So,
wow. It's insane.
Yeah, it's absolutely ridiculous. Hey, look, Jesse, fantastic having you on again. And for anyone wanting to find out more about you, where can they go?
On YouTube, Casper SMC.
All right. Well, what we'll do, folks, is hook up the links in the show notes below. We also did a podcast, so go and check that out as well. Ton of value in there. It's probably one of the best ones I've had on the show. And whilst you're down there, hit subscribe, like, and the notifications bell, and we'll see you in the next one.